Hello and welcome to another update video about Bitcoin. Bitcoin continues to hover just below my that resistance box, that target box here for a possible wave 2. Yeah, remember that we said this main wave 3 that originated down here back in December. Yeah, this long wave 3, this impulse possibly finished here on Wednesday the 25th, and that we are now in this A, B, C structure to the downside. Within the C wave we have 5 waves and could say that we possibly have completed here a wave 1. We're now in a wave 2. We have a valid short trade setup. We already reacted to it now twice. Again, here just a message: anybody who entered a short here or here, move down your stop loss at least to break even, because this can still in the short term go higher, but at least you can get out at a small profit if you get stopped out, or at break even. Yeah, so I think that's sort of the strategy. When you get these pullback trades, you see the price goes in your direction, at least put your stop into break even, because you know, such a target area or setup, you know, the price can run into these areas several times before actually working out. And of course there's never a guarantee that a setup will work out anyway, but that way you can minimize your risk. Yesterday I already communicated to the channel members after my last video that we have here something like you could call it an ascending wedge, ascending broadening wedge, which is generally a bearish pattern which could come to the downside. Yeah, so you would expect these normally to break to the downside, but of course, as you can see also in this kind of trend channel here, the price can still move on for a bit before breaking out. So it could without a problem push a little bit higher here if we say we still have the wave Y to come of this corrective structure, of this wave 2. In this pattern, we could also say that the X wave maybe is still ongoing, yeah, as a triangle. That is possible as well. Bear in mind, all of this is just micro counting. I'm going to show you here some possibilities how the structure can develop. In that case though, I would move the W, the wave W, actually up here, and then we could say we had here an let me think, A wave, a B wave, a C wave, a D wave, and an E wave, and it could rally in a Y wave to the upside here. And then the Fibonacci retracements become important again. So this box is between the Fib retracements between the 50% level and the 78.6 level, basically between 23,230 and 23,650. If that 23,650 level breaks to the upside, yeah, then we can say that this wave 2 and this short trade setup will become less likely. It's not invalidated until we really go above the B wave high here at 23,970. If we go above that, this 1-2 setup gets invalidated, but it will already become less likely if we break above the white resistance area for the wave 2, because it basically pushes through resistance in that case. Again, a wick to the upside doesn't really matter because it's technically not invalidated until we break above that B wave high. The move up currently does look corrective, which indicates that this is an impulse down, a correction up, and that which should follow with another impulse to the downside. So this is all still live, still valid. At the moment, the target for this third wave of the C wave of the larger fourth wave is the 1.618 extension. I can only base it on the last high, so that target might move a bit. Shouldn't move much, but minimum target here for the wave 3 would be the 20,940 level. In a third wave, we should then get a fourth and a fifth. This is of course the assumption under which we come down lower into the target area. I would personally prefer this. Of course, the market doesn't care about what I prefer, but it is just, you know, I'm looking for the ideal wave structure, and the structure would look better with a deeper wave 4, with a C wave down. It's a similar story to when we were down here. A lot of people said we were going to come down, and I told you this structure will look better with one more leg to the upside. Now, it became a few more legs to the upside, but the assumption was correct, that we should get higher prices. So here the assumption currently is that we will get another low in this support area, and as long as we're holding here the box, which goes down to $20,070, I mean, let's call it 20k. Yeah, 20k is a psychological level. As long as that is holding, I would still count this as a wave 4, which means against the 20k level, we can focus on a higher wave 5, possibly in the 25k plus region. Always remembering and bear in mind that there is a lot of resistance coming now in this region. That is the region where we failed and got rejected from in August, probably starting basically now here at 24,230, going all the way up to 25.2k. And now an alternative wave structure. An alternative wave structure would suggest that the low of the wave 4 was already in, because we can of course say that we had an A, B, C structure here. Yesterday I thought it would be a running flat. It's actually not, because the C wave ended already below the low of the A wave. And we have reached the 1-to-1 ratio anyway. Wave A, wave B. And we've reached the 1-to-1 ratio at 22.7k, which is an ideal target for a C wave. So what I cannot rule out at this stage is that the low for the C wave and the wave 4 is already in. I have to say that very clearly, also because today we've got the interest rate decision. So if we rally to the upside, please understand that the C wave doesn't have to go any lower. The wave 4 doesn't have to go any lower. We have the 1-to-1 ratio reached. That is quite a common target for a wave C. Okay. However, the move down was impulsive, which is what you would expect also in this scenario. But the move up currently is just corrective. So it doesn't at the moment show a strong likelihood of breaking out to the upside. But it can, on a day like that, of course happen. So don't be disappointed. If it breaks down from here, it's what it is. If it doesn't break down from here, it is what it is. It sometimes just happens. Sometimes you get a shallow wave 4. For me, again, it would be ideal to get into this area because we haven't even reached the 23.6 fib retracement, unfortunately. So it would be, again, a very, very shallow wave 4. However, it was very long. So still, I can only tell you what is likely, in my opinion, and what an ideal structure would look like. And I can only tell you what you need to know, or the levels that you need to know to recognize when we actually have a breakout to the upside. And this breakout would become much more likely if we break above this white box to the upside. And then, of course, the confirmation is there if we break above that 23,970 level. And I also told you the next key resistance levels along the way. Good, it will be an interesting day. I hope you liked the update about Bitcoin. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.